welcome to the Gold and Silver Club end of week review. We're going to do a 2012 review as well and the outlook for 2013. Okay, so we've got a lot to cover. Obviously, if you've been trading gold and silver in the last week, we certainly have some big volatility. So we'll be going through that, and we've had some big moves to take advantage of. Okay, so today we'll be reviewing the latest developments in the commodities market, analysing the week's performance as well. The live session will cover an end-of-week summary for gold, silver and commodity currencies. We'll be looking at the top trades of the week, live market commentary and technical analysis, the 2012 year in review, outlook for gold and silver prices in 2013, and of course any questions and answers as well. Okay, so very quickly, a little bit about myself and Nick Kelsey. I'm a Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money trading the biggest financial markets in the world, Forex, gold, silver and crude oil. I've trained hundreds of individuals to become independent traders. I successfully manage their own investment portfolios. I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. I'm also a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops. In fact, you can see Nick and myself's predictions for gold in 2013 also on the FX Street website and an article we've just done on there. We'll cover that on this webinar as well. This is Nick, a professional trader, Nick Kelsey, professional trader, investment analyst and speaker. He began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he also spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. It's through his first-hand relationships with some of the world's most successful traders he's discovered the formula, mindset and tools to give any individual the definitive edge to make money in any economy. Also regularly writes for a number of global business and financial publications and has appeared frequently on television. Okay, in fact, this is us on Swiss television recently, just giving our opinions on the gold and silver market commentary and towards the end of the year. And here's just a couple of publications, recent publications. So that was just Global Banking and Financing Review, International Life Magazine, and the South African. So that's just a little bit about ourselves, guys. You're in good hands, and we will get cracking. Okay, so we're just going to look at the gold price at the moment. We've had quite the week since last Friday. So if we just take a look, and if you guys want to cast your eyes over the gold price at the moment and see what we're doing currently. So the gold price right now, we are at 16.45 and 64 cents. So yeah, quite the move since this time last week, which we'll be going through. But we hope you all profited, and certainly you managed to profit from gold and silver and how the commodity currencies have moved over the last few days. Okay, so we're going to go through the top trades of the last week using price action. So we're just going to not go into great detail the actual strategy, but just show you how some of the best trades of the week. So this was a great trade setup we had. This was silver last week, and you can see here where we tested this level of resistance, 31.76, major Fibonacci level as well, and the price, as it was breaking down, came up and tested it. It started to present a level of resistance now as opposed to support. Very good risk to reward on this trade, and alongside gold we had a big move to the downside that we're able to capitalize on and come all the way down to the next Fibonacci level at 30.61, which was what we just hit actually yesterday. So that was a lovely trade. So 133 point move. We're looking at 30 pip risk in the trade at one lot, $300, and coming down to take 133 pips. So at one lot, $1,330 profit for a 4-to-1 risk to reward on silver to take advantage of the downside momentum. So that was a lovely trade setup we had this week on silver. We've also, we had a nice sell short on New Zealand US dollar. You only really needed a 15 pip stop to short this at resistance and that price action level, and worked really nicely. So same with silver. They pretty much reached these levels at similar times. This was earlier in the week on Monday. New Zealand US dollar came up, tested that level of resistance, couldn't break through it. The price reversed and we had a good setup. Yeah, just very simply from $150 risk at one lot, 15 pips, we took advantage of the downside move there, catching 112 pips on the way down. So $1,120 worth of profit at one lot. So we had a really nice risk to reward on that, 7-to-1 risk to reward. So certainly very happy with that sell short on New Zealand US dollar. This was a trade that we had on gold midweek. This is where we initially came down. We tested that 1660 level, which was the key level. One of the reasons being for this is that it was the 200-day moving average. It bounced right off that level, it came down. We did break through 1674 price action level, quite a key level of support, and we had a bit of a knee-jerk sell-off down to 1660, but you can see there on the chart we had a very strong dragonfly doji. It's known as in candlestick talk, but also you would call that a hammer, let's say. You can see the price has come down, it's been rejected quite sharply, and you can see where the price has then just rallied up. So we caught that move, getting in at 1663, got out just above the fib level 1675. It was struggling to keep up the momentum from there, so we just took 120 pips on that. So with a 40 pip risk or a $4 risk if you're trading, depending on what platforms you're using to trade, but 40 point risk at one lot, so $400 risk to make £1,200 for a 3-to-1 risk to reward on gold. So that was, yeah, a very nice quick move, and then 1675 proved to then become resistance, and the price reversed, and we saw a big sell-off yesterday, just down to 1636. USD CAD was really has been a really nice trade again. Great in terms of risk to reward again. So just a nice 15-point stop on that from the support. We took 55 pips, trading it to the next price action levels, which was 0.9881. So there you can see nice 55-point move for $550 if you're trading at one lot, and that was a nice 3-to-1 risk to reward. So those are some of the top trades of the week, guys. So certainly it's been quite the volatile week, and we have seen a big sell-off in gold over the last few days. I mean, a lot of that, getting a lot of questions about you know, the reasons behind that as well, and some of the key reasons really. A lot of it is down to end of year profit taking. So you will tend to see a lot of investors, they will do their year-end selling towards the end of the year, looking to get into fresh positions for 2013. So we're going to see what we certainly saw this happen last year as well, during the week of final week of December, so we had a lot of downward pressure on gold and silver, and then they rallied over 2,000 points on gold, rallied over January and February. We had a huge move last year in January, so do look out for that, particularly in terms of getting into longer term positions at the moment to take advantage of potential big upside in January and February. But we'll go through that on the charts with you so you can see exactly what we're talking about. Before I go actually onto some live market analysis, let's just have a look at the year in review. So we're just quickly going to look at some of the key moves really over the last year. So what we had, a year in review, so this is what we're talking about. So the top gold price headlines of 2012. Gold price gained 11.1% in January of 2012 from the low of 1525 and rallied all the way back to 1740. So this is exactly my point. So last year we had exactly the same situation. We came all the way down at the end of December to 1525. A lot of profit taking and a lot of we had a lot less volumes in the market. But what you find over this period, if there are hedge funds who are still trading over this period, which there are, it tends to be the case of a bigger fish in a smaller pond, so they have a much more they can have a bigger impact on the markets than they would normally. So in terms of if a lot of liquidation is happening or even selling short on these markets, there is more chance of stops getting hit and bigger moves over the next few days coming into towards the end of December, but potentially setting up very nicely for January if you can catch some of these big moves to the upside. So the primary catalyst for gold move to the upside was driven earlier this year by the dovish tone from the Federal Open Market Committee, the FOMC meeting, and the Federal Reserve chose to extend the time frame for its zero interest rate policy to late 2014 from mid-2014, and introduced a new language into the FOMC statement by saying that it intends to maintain a highly accommodative monetary policy stance for the foreseeable future. So that was very impactful for the markets in terms of a rally. Okay, so we look at some of the key news as well for gold in 2012. Central banks around the world bought a total of 351.8 tons of gold, so 11.3 million ounces in the first 9 months of 2012, so up 2% from a year ago. South Korean Central Bank added 14 tons. Brazil bought 18.9 tons. Paraguay bought 7.5 tons. Turkey imported 4.2 tons. Argentina added 7 tons last year. And the gold, top gold price headlines for 2012. This was, of course, major news this year and caused a big spark to the upside. We had some huge rallies, over 650-point rally in an afternoon on gold off this news on the 13th of September when the Federal Reserve launched QE3, and that was when Ben Bernanke ended weeks of speculation about the prospects of further monetary stimulus for the United States economy and launched a third round of quantitative easing, QE3, and market's reaction was huge. We had a big move in gold, silver, the commodity currencies to the upside based on that news earlier on in September. We also had another news announcement, which a lot of you know, at the beginning of December, regarding additional QE, if you like, up to the tune of an additional 45 billion being printed every single month. But this additional QE3 this time, I think it's taking us up to about 85 to 90 billion in additional monetary accommodation every single month now going into next year. But it didn't have such a big impact as the QE3 in September. There are a few reasons for that, which you can certainly subscribe to our newsletter at the end, and we'll be going through in detail on the weekly newsletter. But one of the key reasons for that, of course, is that there are less institutions and funds in the market at the moment as we move into December who would potentially be normally pushing the markets right up. We saw a big spike in price when on the news announcement and a big sell-off, so a lot of funds and a lot of traders taking advantage of the previous low that we had of 1680 running up to 1720, which was a key price action move, and a lot of profit taking at that level, and then we've just had a subsequent sell-off as more profit taking has occurred. So that's part of the reason for the big move again to the downside. Okay, so what's our outlook for gold in 2013? Okay, I'm going to leave that on a little bit of a cliffhanger, and we'll go and look at some live market commentary, and I will come back to our outlook for 2013. Okay, so I'm just going to take you across to my live trading screen, so just bear with me as I get this set up for you. Okay, as we move on to gold, guys, and we're going to have a look. If you go to the daily time on gold, what you will notice certainly on this market is at the moment, after yesterday's sell-off, we have currently put in, this is known as a dragonfly doji. So what a doji means is the price opens and closes at the same price. You can see we retested this level in the evening session here. Actually, it's a tweezer bottom, which is quite a powerful reversal at 1635. So you can see here we've actually we bottomed at 1635, then we've retested it during the Asian market. So we're obviously getting some big buys in at this level, 1635. So just on a candlestick pattern basis, that is quite a bullish pattern if you're not looking at anything else. But you will also we'll go into some other indicators on this as well. But you can see how we've essentially had a big downward move. We broke through some key levels. Even just yesterday, actually, we broke through that 1660 level, which was a key level. This morning we've rallied up to 1651, essentially just bounced off that level, and we're reversing at the moment, but we are starting to grind a little bit higher from the low that we put in yesterday. We are currently about 100 points up from that low, or $10 from the low of yesterday. So whether we're now going to get a reversal, key levels to be looking out for Obviously the 1650 level, well actually 1651 thereabouts, a breakout of this level, and next key levels to be looking at would be coming back to this 1660, which is where the 200-day moving average is as well, and a key price action level. Breakouts on that and where you might see potential profit taking would be 1674. You can see this level here would be quite important to break through the 1674, or whether we're just going to get a reversal back down from that level if it starts providing further resistance. A breakout from 1674, we would be looking then to start targeting 1691 and back to the 1700s really for a potential breakout, and that's something we could see play out certainly at the beginning of January. Okay, so here we're going to look at silver. So this is what we had on silver. This was the big move we had yesterday to the downside that we took advantage of. Okay, so this was a setup, so you can obviously see here the levels we were looking at, and we couldn't break through, so the price came down. It broke through the key level support on 66 level. We broke through it, came up, we tested it, and then we started to reverse. Very good risk to reward on this trade, and you can see here the price we're targeting, we came all the way down to that 30.416. I mean, it's a good level to start to basically take half profit. And then to get lower, we have brought down lower. Now we're down to this 29.6 level. Let's have a look. So in as far as, let's have a look out to the daily time frame, what we can see at the moment on silver. We're getting a similar setup to gold actually at the moment. So you can see there we actually retested, very interesting, during the Asian session we retested the same low that we got to during the American session of about 29.50. So you can see that is providing some support currently. It's not a level that's really provided much support in the past. Just going on to the time frame there. So it's not. We could see, in terms of if we were to see further weakness, a retest of this 28.74 level is a key level, key price action level if we were to continue down. Obviously at the extreme side there is a lot of support at $26 an ounce. It's a level that we didn't break throughout the whole of 2012, and there's a lot of buyers which come to the market when the price does come down to 26. We'll have to see how the market goes over. Obviously today we're coming into Christmas week next week. We don't expect too much volatility on Christmas Eve on Monday and on Boxing Day, but coming in towards the end of next week things could pick up again. We've got some more financial news, so on Thursday and Friday next week we could start to see some momentum again in these markets. Well, let's have a look at New Zealand US dollar. Okay, New Zealand US dollar, wow, that was a nice one. Okay, so New Zealand US dollar, we've had a nice sell-off from, again, a key level of resistance there. So you can see we tested it again and we weren't able to break through. So the risk on this was phenomenal, because you really didn't need much to be able to stay in this trade in terms of a sell short position. We only just broke above this resistance by about 6 points. So really that was one of the trades we showed you earlier, 15-point risk on the trade, and we've just been trading it down for sell short position, when now it's continued to move. It's about 222 points down at the moment, so really it's not got much to go until it comes all the way down to really this level where we could see some potential support on New Zealand US dollar. So we really could come down to about 0.82116. Obviously you would have wanted to catch that much earlier, but you may want to see if there's a bounce coming off that particular level. But in terms of a sell short, that's been a lovely trade to the downside there for New Zealand US dollar. And Australian dollar USD CAD, sorry, Australian US dollar, same sort of thing. We've had a sell-off alongside gold, silver. New Zealand US dollar, sorry, Australian US dollar alongside New Zealand US dollar has sold off. You can see a nice level of support previously around here, which finally did give way, and we've achieved to the downside. In fact, got to that price action level as well. It's about 74 points on the trade there. Obviously you don't want to be trading everything at once, shorting New Zealand US dollar, shorting Australian US dollar, shorting silver, gold, because you've got too much exposure, so you have to pick the best one. So New Zealand US dollar presented the better risk to reward for a sell short opportunity, but you can see Australian US dollar may come into some level of support now at its where it is at the moment, as gold and silver are getting supported currently, but it's not a perfect setup. So that's what we're looking at the moment for Australian US dollar. Okay, so what's our outlook for gold in 2013? Okay, so in the short term, if the uncertainty surrounding the fiscal cliff continues to have a negative effect on gold, then the price will be paying close attention that we just discussed was 1626 level. A break below this level could see prices revisit 1,588. I don't see much support at just bang on 1,600. Just based on previous levels of support, but 1588 will be a key level to look at. Should that downward pressure carry on in the first quarter of 2013, if the momentum does continue to the downside, keep a lookout for 1520. That was a critical level of support which did not get breached in 2012. Important level of support, okay? On the flip side, if gold continues to be supported around the 16, we're at 1640, just below 1650 at the moment, the 1660, if it gets back above that, that will be back above the 200-day moving average as well, which is used by a lot of banks and institutions to get an overall trend of any market. So that's the important level. If we get back above that as well, the next key action levels will be 1674, where you could see some profit taking, or if we break out above that, we could be looking at the price coming back towards 1688 and then a rally back towards 1700s. In the long term, over the next 6 to 12 months, we're bullish on gold and believe the price will resume the upside once we break 1700 again. We believe gold price will continue to trend in the trend it formed in 2012, mainly driven again by a lot of major news announcements regarding the US and the Eurozone fundamentals. But we are bullish from the current prices at the moment over the longer term period. Certainly once we get back above the 1700s, we would potentially see a rally back to the highs of 2012. Okay, so as we said before, prepare yourself for an extremely profitable year ahead starting in January. Have a good rest, guys, over Christmas. Make sure you're nice and fresh to get going and make a lot of money for 2013. We're certainly expecting some very, very profitable moves ahead. And of course, if you want to find out more information, join our workshops in January. Well, actually, January's we do have some availability. The best way to do that would be to get in touch. One of our workshops in January is absolutely sold out. We've got some availability, I know, a February workshop. We may need to open up an additional workshop because we're getting a lot of demand at the moment and overspill, so we may open up another workshop. So if you want to apply, guys, very simply, it's application only. Just go to the website www.thegoldandsilverclub.com, click on Learn to Trade. In the top left hand corner there's a tab that says Learn to Trade. So go to that tab and very simply fill out the application form, Gold and Silver Club Trader Coaching Program, and the next steps we will talk you through. Okay, so that's very simple. If you've got any questions at all, of course, get in touch with us via email, office@thegoldandsilverclub.com. For those of you who want to give us a call at our offices, for the UK office, call us on 0207 193 0403. And if you want to get in contact, if you're calling from Asia at the moment, get in contact with us at our Asia office at 852-8191-0403. Okay, and finally, if you make sure you sign up to our newsletter as well, subscribe to our newsletter, you'll get all the weekly gold, silver and commodity currencies news, live market analysis and prices. So do make sure you take advantage of that. That's just on our website, and you can very simply just click on subscribe to our newsletter. Have a great Christmas, guys, and we will catch you in the new year. Okay, so that's us signing off. Thanks, guys. Bye-bye.